Good morning, ladies and gentlemen, and welcome to ÇEMMA's webinar on understanding voluntary occupational retirement pension schemes, which we will be referring to as VORPS because it's quite a mouthful. I would like to remind you that this webinar is being recorded and will be available on demand for viewing on the ÇEMMA website. Today, I welcome for the panel discussion Andrew Aquilina, who is the head of policy at the Chamber of Small and Medium Enterprises, Joseph Bugeja, General Workers Union General Secretary, Franz Camilleri, economist and advisor within the Ministry for Social Policy and Children's Rights, Joseph Farrugia, General Director of the Malta Employers Association, Ramon Muscat, who is the Director of EMCS Advisory. Welcome, gentlemen. Good morning to you all. VORPS. We'll just give a bit of background to the discussion by reviewing some of the research which ÇEMMA has conducted over the course of last year in terms of household money management, just to frame and put into context where VORPS comes in. And one of the findings, one of the areas that we looked into at the time was people's perception of financial security, their financial security in retirement, where only 23% of respondents felt confident that they will be financially secure in retirement. Now, I would like you to notice here as well that in the age group 25 to 34 years old, 33%, which is above the average, were confident about their future. And maybe one can look at this as huge perception of immortality coming to play over here. Next thing, however, that I would like to point out in this slide, where we were looking at people's perception on the financial future. How much do you worry about your financial future? And here, the 25 to 34-year-old segment where 57% of them were either very much worried or quite a bit. So we do have here, I don't know, Franz, if you had to comment on this. On one hand, you have this cohort saying that they are confident about their retirement in future. On the other hand, they're also pretty worried about their financial future. Is this an opportunity to attract these people?
Definitely. I think Mario, that I had noticed that there seems to be a little bit of conflict between the two charts in terms of perceptions of security during retirement and perceptions of financial security in general. The motivations might not necessarily coincide,
right.
And that is perhaps why there is this discrepancy. I think to me the message from the charts seems to be that people who are close to retirement, so I mean one would look at the age brackets 55 years upwards, okay, are not very confident about it. Why? Probably because having worked throughout their life and now they are close to retirement, right? They are paying attention to the income which they will have post-retirement, and probably they are now seeing that this will not be enough in general. I'm speaking in general because obviously it depends on the income which one would have earned during his lifetime. But in general, they might be seeing that the state pension they will be receiving, because most people are relying on the state pension, will not be enough for them to live in comfort. Okay. Mm-hmm. On the other hand, by contrast, those who are still in the early stages of their working life, okay, the reason why they might be worried is not necessarily the pension itself, but worried in general.
Other issues.
about financial issues. So I think if one were to do some further research about this, it would be interesting to find out, what the motivations are. In terms of the opportunity, yes, I agree with you. Definitely, there is a tremendous opportunity. Not just because of that, because we know that in general, the percentage of people who are thinking of their financial situation post-retirement is not enough. They are not giving enough attention to it. Okay, they are exercised about other issues, and this is not one of their top priorities. But I think this is where one needs to work. In terms of the voluntary pension schemes or occupational pension schemes we're talking about.
Definitely. Thank you for that, Franz. Some other findings. The question here was, have you ever tried to work out how much income you will need in retirement? And this is, in a sense, indicative of how worried one would be, how interested one would be in planning for their retirement. And again, looking at the younger cohort here in the note, only 12% of those aged 45 and over indicated that they had tried to work it out. 18 to 24, only 5%. So again, I think your assessment here, Francis, is correct. The worry about the financial situation is about, whether they can afford to buy their car or their house or whatever, not so much on the pensions. That is a worry. Here, they are not really thinking about it. And I think this is an important takeaway from this research. Do you have a retirement plan? Only 21% have some sort of retirement plan going, besides the mandatory, the contributory pension, which is contributed on an ongoing basis. So again, there doesn't seem to be an awareness, a sensitivity to the need of planning as early on as possible for retirement. Starting to come now to VORPS proper. VORPS is part of what we call the second pillar, where there is the employer employed. The third pillar, of course, is where it is individual, oriented towards the individual. So it's private pension schemes that the individual can contribute to throughout their life. And obviously the first pillar is the social security contributory pension, which is mandatory and has universal coverage. VORPS came into effect, the rules for VORPS came into effect about 5 years ago, 1st January 2017. So it's relatively recent, but at the same time, not that recent. I mean, for 4 or 5 years, it's a good time for one to start assessing. And also the benefits have improved since they were published, since they came into effect. Basically, what do we have with VORPS? With VORPS, we have a scheme that employers would set up. So there is the employment relationship that is between the employer and the employee. Both need to be present. That is what makes this scheme qualify for VORPS. And it can be set up by a single employer, by a group of employers, by an association of employers, jointly or separately. Now, with VORPS, obviously, you have 2 stages. The accumulation stage, that is when money is being put into the pot, if you want to look at it that way. And after that, you get into the decumulation stage. So you need to start taking out money between 61 and 70. You can delay it up until you are 70 years of age, but not beyond. And once you start drawing down the amount, then it would depend on a pre-agreed withdrawal amount every month, or however you agree with it. Now, we're mentioning employers, but it is also important to clarify that a self-occupied person can also be included in this definition. And basically, if you're part of the final settlement, you need to be part of the final settlement system, the FSS, because that is how VORPS is administered in terms of getting the fiscal benefits for participation. And a qualifying employee, again, would be someone who is who falls within the definition of a taxable person, but there is the exclusion of highly qualified, of those who are employed under the highly qualified person rule. So this is the only exception. There is also the possibility with VORPS of taking out up to 30% as a lump sum at the beginning of the withdrawal period. And therefore, there is a certain element of tax planning here, because obviously the monthly withdrawals then would constitute part of the individual's personal income and would be subject to the rate of tax applicable at that time. So by looking at how, what kind of lump sum you want to take out, if any, you can also have some element of tax planning going your way. Now, VORPS is quite attractive in terms of the tax benefits that come with it. Those benefits have increased. Initially, an individual had up to 2,000 credit on up to 2,000 euros, 25% on 2,000 euros. So that would have been 500 euros a year. That has now gone up to 3,000 euros. Similarly for the employer. So, the employer gets to get the tax credit at 25%, maximum 3,000, and 2,000 tax deduction at the marginal rate. So they also get 2,000 at 35% as tax deduction. And if we were to look, we had prepared this kind of giving 3 scenarios here for a company with 20 employees that had that would contribute the maximum of 3,000 in VORPS per employee, or 1,000, or none at all. And as you can see, the profit after VORPS here for the company, assuming it had a profit of 250,000 euros, the profit, the cost of introducing VORPS would have been of 1,550 per employee if it had gone for the maximum amount given, and of only 400 euros if it had gone for 1,000 euro contribution per employee for VORPS. So as one can see, this is attractive. We believe also that this can be a very powerful retention tool for companies to use. In fact, here we calculated, for example, that the cost of losing a full-timer who is earning about 30,000 euros package would be 12,600, close to 13,000 euros per employee turnover. So if by investing the 1,500, you are managing to retain talent within the company for longer, then you are also in effect realizing substantial costs. If we had to look now, trying to gauge some numbers, there seems to be an interest in VORPS. In 2020, there were reported some 1,000 participants who were contributing to VORPS. We're talking individuals here, and in last year, this had gone up to 1,700. Now, that is, one can say it's a 70% increase, but in terms of absolute numbers, it is very, very low. And also given that this is 5 years into the since the regulations have been published, started being implemented. So the big question: what will make this figure grow significantly? What can we do to attract more people to these schemes? Now, obviously, from ÇEMMA's perspective, our interest is to get people to look at these different options, of course, because once people start planning for retirement, there is less of a burden on the state. Eventually, there is a better quality of life, and the benefits go on and on. So, France, I start with you. Our current system is an opt-in system. In other words, if the employer provides this opportunity, the employee has the possibility, if they want, to join it. In many countries, there is an automatic enrollment. In other words, once you are employed with that employer, you are automatically part of the scheme. And, however, you have the right to opt out. But obviously, both psychologically and also experience shows us there is less of how shall I put it, a propensity to opt out than to opt in. Similar to why, for example, with GDPR, it was no longer legal to opt out, but you had to opt in, the reverse argument. So what's your take on this?
Right. I think a little bit of background is in order, in the sense that we all know that the policy of the current government, but also of other political parties in Malta, has been that first of all, the pensionable age rose in recent years, but now there seems to be consensus that there shouldn't be a further increase in the pensionable age. And one has to mention this because if you look at the pensionable ages in most other EU member states, quite a few of them have a higher pensionable age than Malta. Okay, so obviously that will be impacting on the sustainability of the and adequacy of the pension system. Okay, the second thing is that apart from the pensionable age issue, is the parties. Again, there seems to be a consensus that there should be no mandatory occupational schemes in the second pillar, or even mandatory saving schemes in the third pillar. Okay, so I think to a certain extent, now I'm talking from the economic point of view, it's a sort of double whammy. Okay, it means that the pension system, the state pension system, has to absorb a bigger chunk of the income which people will rely on post-retirement. Okay, there have been some changes, some of them to the good, and some of them quite successful in terms of incentives. Okay, because the approach has been not to make things mandatory, but to make them to incentivize them so that people will take up the incentive. Okay, and for example, extend their working life. Okay, there have been various incentives introduced for people both on a full-time and part-time basis to extend their working life beyond the pensionable age, and quite a few people are doing that. So that has been to the good. In terms of the schemes we're talking about here, I would like to say that the pensions working group, of which I was a member, has looked at that very closely and has made a number of recommendations in its report. This is in the public domain. It was also open for public consultation. And we are now in the phase where eventually this report will be discussed by the even by the House of Representatives and the social partners. Okay, and hopefully some of those recommendations will be adopted and will be implemented. One of them concerns the savings plans and the occupational savings plan. And as you say, I mean, our departure point was the figures you have just mentioned, the 1,700 who are enrolled. It's as you say, it's a big increase on the previous year, but it's minimal. I mean, in terms of impact, it is minimal. The take-up has not been that great, okay, given that we are now in the 5th or 6th year of the scheme. So how do we incentivize that, okay? And the system you mentioned has been adopted in a number of countries, in Australia, New Zealand, the UK, for example, typically the countries we tend to look at, and they have been very, very successful, okay? The result has been, the outcome has been that it involves a lot of heuristics, okay? In the sense that people do not necessarily take action which is rational, okay? But once you convince them to do something or incentivize them to do something, the likelihood is that they will continue doing it. It will become a habit, in other words. So our recommendation is to introduce this voluntary opt-in, opt-out, completely voluntary, as you yourself said, all right? Where basically the employee on day one that he joins an employer will be opted into the scheme, okay? He will then have a cooling off period like you have in the sale of many financial products, actually, okay? To think about it. Typically, it might range between 30 to 60 days, okay? And if he says, if he wants to opt out, he can opt out, right? But if he doesn't actually take the initiative to inform the employer that he's going to opt out, he will continue to be a member of the scheme, right? And this voluntary opt-out mechanism, as I said, have been found to be very successful in other countries. Okay, the majority of those who were enrolled decided to remain in the scheme. Okay, the trick is obviously some of the details have to be worked out and the various regulations have to be worked out. I mean, it also depends on the percentage which one would put away. Okay, quite a few countries have percentages of 5 to 7%, for example, of the income of the individual. Another feature could be that you could increase the percentage you put in as you go along. Why? Because obviously your income is likely to improve as you go along. You will be promoted, or you will get a better job, and therefore you will have a better, your ability to put into the scheme will be enhanced, and therefore there will be this opportunity for the people concerned to participate. So yes, I mean, this is something which we would very much like to see being adopted also in Malta.
Thank you, Franz. So I turn to you, Joe, as the employer's representative. What's keeping employers from, going for this, given also its attractiveness as a, as a retention tool in a very tight labor market?
But I think various factors. First of all, I believe it requires a change in culture, because so far I don't believe there is sufficient awareness of this scheme, and I think we really should work at that. We should work at generating awareness also, and therefore making employers aware even of the incentives of such schemes. I reckon that if we were to conduct a survey among employers about whether they know about it, I think many of them would reply that they actually don't. Therefore, that could be something that we can work on. The fact that over a year there has been increase from 1,000 to 1,700 could imply that it is a sudden increase, 70%. And although the numbers are still small, but that increase is encouraging and maybe something which one could work on. Also, the take-up of such schemes depends on the willingness of the employees as well. So since they are voluntary both on the part of the employer and also on the part of the employee, I believe that many employees would choose to opt out. And they would choose to opt out, particularly younger employees, because they might have they might consider to have other more pressing priorities. So I think this is linked to the family life, cycle. So that would certainly have an effect, and many employees would prefer more disposable income to which they have access immediately, rather than putting something aside as a sort of occupational pension plan. And something to consider as well, and maybe it could be supplemented with another study, whether employees are opting for other third pillar products, because there is a choice whether to have nothing at all, okay, a choice whether to have your own third pillar product as an employee, and then there is as well the VORPS scheme, which some may find attractive. Employers may find it attractive because of the benefits which you mentioned, the retention factor of employees, and also the tax incentives, even though the end result was less profitability. But that could be offset by other benefits. For example, you stressed the cost of employment, especially in times of a tight labor market. Therefore, the advantages could definitely be there. Perhaps one could analyze as well of the number amongst the take-up of the VORP system, whether it has been more predominant in some sectors compared to others, and also maybe segmentation by size of company. Is it the larger companies? Because if we have 1,700, okay, are they concentrated in a few employees or few companies employing more than 500 people, or is it distributed amongst micro enterprises. I think this is something which needs to be analyzed further. Also, another concern would be the portability of this scheme. We know that Generation Z tend to change jobs more often. Therefore, the culture of staying for a long time in a job or of having a job for life is changing. So today's young people have a different approach to working than they used to. My generation, for example, okay, and therefore, if they choose to participate in such a scheme, they would certainly ask about the portability if they switch employers, okay, and what happens if you are in a scheme in one company, you change employment, and the other employer does not have a VORPS scheme. So if there are clarifications, maybe assurances on such situations, I think this idea of VORPS will become even more attractive. Thank you.
Thank you, Joe. You raised a number of points there, and I think we can address some of them. For example, obviously, what happens if, as you say, you have mobility, one moves from one company to another. In that case, if the new employer has a VORP scheme, then obviously they transfer there. If they don't, then it is transferred into a private pension plan. So there is nothing that is lost there. Also, there are other benefits. For example, if somebody suffers permanent disability, then it can be paid out before the age of 61. Again, as you rightly mentioned, of course, there are other options, like the private pension schemes. But as we saw, also only 21% of respondents had any there. So definitely there are more people who have private pension schemes, but at the same time, it is still very low. So we're still far off. And you are very right. There is a need to create awareness, both with the employer and with the employee. And in fact, during May, we will be holding through EMCS information and training sessions directed at HR directors, C-level suite executives, as well as business owners, to expose them to VORPS and how they can work. But I also think, and this is I think very important, that employers need to start looking at employee well-being also by incorporating financial well-being for employees. In other words, educating their employees in good money management, because this is also to their benefit. Financial stress, lack of financial capability has been found to be the third largest influencer on stress, which affects workplace productivity. So it is a win-win, but it is a question, it's not a question of ticking the box. We can offer you VORPS for argument's sake. Do you want it or you don't? You have to sell it as well. You have to sell it as well. And I think, it needs to be approached holistically to be able to improve these results. So next up, Josef, is this going to be part of your collective bargaining approach in the future? Is this going to be included there? thank God we're virtual. Otherwise, Joe would have been get inching closer to yourself. You're
You're
muted,
muted.
Joseph. You're muted.
That ethics, virtual ethics. Mela, thank you, Mario. And no, actually, everybody is on the same page. There are different scenarios and different things. And actually, well, if you said the future, are we going to use it in the collective bargaining? The future is now because it's already happening. We already have a couple of collective agreements that they include the voluntary divorce. So it's not something we've been thinking about it, but there is a whole context about it. Actually, it started all by, if you can recall, in a lot of places, there was this welfare fund, and it was always an opt-in. You just go there, you write yourself, and the old ones were always contributing to the welfare fund. The new ones weren't much interested. So I actually adopted the same thing, and I said, everyone starting from today, and this was agreed with the management, that everyone who's recruited is automatically recruited in the fund. And if they want, they can opt out. It's the same principle. And it was a huge success. Nobody opted out to go there. And before the pandemic, we started working on this, of how to onboard people. So we went deep into the subject, and we started seeing other models, especially the one in the UK. And as Franz said, it was a huge success. This is the thing that you are mandatory in, and if you want a voluntary opt-out, most of the younger generation stay there. And we have quite a few examples. Even my daughter, who lives in the UK, first thing that they gave her when she started working was in which private pension fund she wants to be recruited in. But there were, and we went, apart from studying models, we also did some surveys. And we asked employees what was worrying. First of all, there is this mentality, so financial literacy must be a good basis, and it's a good approach to go and start educating people of what's happening. First of all, when you talk to the younger generation and you tell them about pensionable age, they will tell you, definitely always suffer that. I will think about that when I get old. Which have a little effect, nobody knows, but it's futile if you start investing when you're 50 or 55, because there won't be enough accumulation of wealth. Secondly, and this is typically in Malta, the first great investment that we do when we are younger generation, apart from the car, which is not really an investment, is we start investing in housing. So we start contributing. And the way that you get a loan is that if you get a loan and you buy a house when you're 20 or 25, then you have 40 years of payment. So actually, they're thinking that they're contributing. Another third factor that it was, and this is really worrying, is that everybody thinks that they have 2/3 pension of their actual salary, which is not. And this is across the board. It's not just low-wage earners that think this, but I had managers calling me and asking me, is it true that I don't have 2/3 of my actual wage? Yes, it's true. How can it be? I've been contributing. Don't ask me, but that's the law. And so actually, there are multiple issues, multiple facets that needs to be addressed. But yes, we are in favor of this. So when there was the consultation on the pension in 2021, we proposed this. We proposed it, and we said, listen, let's discuss this. Let's discuss this with employers, see what's contributing. We proposed that it's risen from 2,000 to 2,500, and we continue to contributing. Of course, the pandemic halted all this because everyone was concentrating on keeping their job, not actually thinking about. There was drastic measures. I mean, a lot of employees had their wages either gone to 1,200 or to 800, because not a lot, all employers could contribute before 400. So actually, some of the employees, or a majority of the employees, were being paid 800 per month, and they couldn't think of investing in something else. Now that there is a recovery, we're starting again talking about this and discussing with employers. It's not just convincing employers, it's also convincing employees. So when we ask employees, listen, let's start thinking of instead of a pay rise, let's start thinking about investing. They want the money now. Another obstacle is, and that is this perception, all right, I'm working with Mario now, and he's investing and I'm investing. So if I leave in the future, what will happen to that? Well, I can continue to contribute. Mario definitely won't be contributing. The new employer will be contributing to that fund, or it's just going to be me. And apart from the fact that they always mention cases that happened in England when there was Max, he was owner of the Daily Mirror, and he abused the pension fund and stole everything. So that's primary. And you start reassuring them about how the fund is dealt, that there is companies, that there is the banks, that there is board of governance to see the ethics and what, and everyone's scared. So it's a whole change of mentality. Apart from in the consultation program that we proposed it, we even proposed the same system now for the political parties in our manifest that we sent to both political parties, to major political parties. And we told them, listen, this is the way forward. It reduces the burden on the state coffers. It improves the quality of life. There is a study about this. It's an additional stream of income when you reach your pensionable age. It helps a lot. So there is, and if you start contributing a small percentage when you start working at 65, then you will have a good return. But we need to educate all social partners, because it's not just employers. Even we need to believe in this system. It's not just that I need to explain to you and convince you. I need to convince myself. If I'm not convinced, I cannot convince you. And we tackle all this, but we need to make one front, because this is the future. And we already included this in collective agreement. It is, there is always two sides of the argument. So an employee can tell you, but if I move, what will happen? On the other hand, if you're recruiting, it is a positive that can be used, that you are offering something that no other employer is offering. And we included this in the collective agreement. And this is a success. It's not, we don't cover the 1,700, but we have a big portion of that. And because it's a big company, it's not one of the largest. So it's not but we cover a bit of that. Those are all the questions, but it is definitely the future. And we need all, not just employers and trade unions, but the ministry, ÇEMMA, because it's a change of culture to start contributing when you're young. And we need to show evidence. It's not just by telling people, but we need to show them that they will be better off if they start contributing to this voluntary.
Agreed. Thank you, Joseph. Andrew, small, medium enterprises, self-employed people. Where does the chamber stand, so to speak? What's its vision? Is this viable for self-employed people, for small enterprises?
Hi, Mario. Good morning. Well, generally speaking, the definition of an SME is quite wide. So focusing on the small to micro businesses, including as well as self-employed, it is a daily struggle, I would say, for any employer, any small employer to set up a system, a scheme, or whatever it may be, irrelevant if this is a VORPS scheme. VORPS is definitely not an exemption to this. So employers find it very hard unless they're having hand-holding and having someone directing them and guiding them all throughout the process to actually sit down and set up a system, apart from the additional sort of administrative and burden, I would say much more than the financial aspect of it. Other aspects are definitely the lack of knowledge employers have. But I would say that employers might be demand driven as well. So if employees start asking for it, it might be something that would be ingrained in the culture, and employers would be willing to start offering this. An example pre-COVID, something an added value for a job would be the remote working aspect or the teleworking aspect. When employees started requesting this, there was a sort of change in culture as well. Employers would have seen the benefit of it as well. So I would say the scheme would be demand driven as well, like in any other change. We've seen the VORPS scheme coming from two aspects. One, as an added value for employers to offer to their employees, and also for employers themselves and the self-occupied to enter in such a scheme. Now, unfortunately, an employer throughout the lifetime of his lifetime never thinks about retirement. Employers never technically retire unless they have some sort of health complications, unfortunately. Or sorry for that.
It's okay.
Or when they've reached an age, that they cannot continue working. They normally think about transferring their business to possibly future generations. So that's the mindset in place. Unfortunately, they only think about retirement when they've come for it, when it's no longer viable to enter in such a scheme. And in their majority, you would find other possible options where they can get a faster return on investment.
Do you see, Andrew, a possibility of the chamber actually, trying to provide or facilitate a VORP scheme for your members, for example?
Definitely. As an association, I can say that we are studying this possibility, because I think it can increase uptake. Employers have a huge level of trust with the SMA chamber, so something coming from us and from any other association in reality could be seen as a positive motivator. In terms of employees, I agree with what my colleagues Joe and Joseph mentioned regarding employee retention. I mean, there is an added value with offering such a system to your employees. Unfortunately, I would say having something not tangible has its sort of disadvantages, and one of them would be that if an employer is offering, let's say, an additional 5K per year upfront rather than investing the 5K in a VORPS scheme, I would definitely think that the absolute majority would choose to receive the money immediately.
Which is why we also, created a calculator to estimate the cost of actually losing an employee.
Yes.
Because when you start looking into it, there's not just the loss of expertise, the loss in productivity, the decrease in productivity, the direct cost, and abroad they have calculated that it costs anywhere between 6 and 9 months of that person moving out to take it on, which is why we've roped in the MCS to hold these information sessions. Ramon, two questions. What do you have in store vis-a-vis these information sessions for employers, and also as a researcher who, you know, you've done many marketing research studies. Any points as to how to reach the younger cohorts to participate?
First of all, good morning to everybody. Starting with the easy question, and we're going to organize a number of training sessions, particularly starting off on the 16th and 17th of May. We're going to have two sessions, a morning session at 10:30 and another session at 2 p.m. for HR managers to actually explain to them and go into detail on the VORPS and how it can be used, and obviously the benefits, especially as you've all been mentioning, how it can be an added value for job retention. As for the more difficult question of young ones, I mean, the survey itself that you gave us figures at the start of links with what you've been saying. When basically we have the young who have a positive outlook at life, then their inclination to think about pensions decreases considerably. In Maltese, they say, "Umbat naraw," like the future will take care of itself. So I think to actually see how to instigate the young ones, one has to understand their attitudes and even their habits. You've mentioned, and rightly so, that there is myopia amongst the young ones. They think about the near future. So they're more interested in buying a car, buying a house, more than the pension. What they've done abroad is that they understood that it's not a one-size-fits-all. So the service provision has to be tailor-made also maybe to different cohorts. By way of example is flexibility. Since the young ones want to be so in control of their finances, maybe one way is to give them the opportunity to, okay, they're in, but at any moment in time, maybe that could go out if they need to use the finances for something else. Another approach was actually the opposite. Maybe there can be a system where you have a fund, and after a certain amount of time that is translated automatically into a pension fund. So the method of flexibility seems to be extremely important from the research we've been doing on the topic, especially with young ones. And this relates also to trust. Young ones, when it comes to trust, basically they trust more themselves than anyone else. They want to be in control. So giving them this flexibility enables them to have peace of mind, like they can use these funds. As you said, once they're in it, they rarely go out. But having the thought that they can gives them that flexibility. So abroad, they're trying to come up with schemes and methods in this respect. You also mentioned a lot education and awareness. Education is the fundamental aspect, because before people decide where to get information, they have to know what it's about. There was a study which was conducted in the UK in 2015, specifically on pensions with the 18 to 35-year-old. And 86% felt that they needed more education about what the pension actually is. Also, when we're talking about education, so what is the language that is being used? It is very important that we're using language that they understand, that they can relate to. More often than not, the word pension scares people. Why? Because they don't have any idea, so it scares them. So what language are we going to do so that it doesn't scare them? That will go a long way to then instigating them to try. Because as you've been mentioning, rationality alone doesn't work, so there are other aspects. So how are we going to motivate them? The last point I had before I pass on to you, Mario, is that sometimes it's also about thinking as an employer. Like an employer has a vision, and then has to break down that vision into goals and objectives for the employee into shorter term. So for the younger, where it's long-term pension, we have to somehow break it into shorter goals. What are the shorter goals we can create? And then they have some tangible benefit along the way, so that they start seeing, okay, this is making sense. Now I'm understanding why in 20 years' time it will make sense. I think these are some aspects that are important to keep in mind.
You're right, of course. I mean, you mentioned pension and you think about old age, and you don't want to think about old age when you're in the prime of your life. You would say, you know, let me enjoy it while I can. So definitely there needs to be a concerted and coordinated effort in terms of addressing all the different triggers and all the different factors that come to bear. Franz, you had something to say, I think.
Yes, a couple of points actually. If I could start with what Ramon has just mentioned. I think to a certain extent, using scare tactics crudely, okay? Speaking on current statistics, okay? People and young people actually need to be aware that the at-risk of poverty rate among the elderly, okay, in general, is much higher than it is among those aged less than 60, okay? This is not just in Malta, but all over the European Union. So just to give you an idea, the at-risk of poverty rate among people aged 65 and over, okay, in 2019 was 27.5%, okay? Whereas the at-risk of poverty rate among those which are below the age of 64 was 16%, 16% against 27%. So that is something which people need to be aware of, okay? The likelihood that they will be poorer when they become older, okay? The second important thing is that if you look at the European Commission workings on the state pension system in Malta, okay, it shows that over a 20-year period, wages in Malta will double, okay? But the pension will only increase by 95%, okay? So, in other words, what are they saying? What they're saying about Malta is they're saying about all the other member states is that there is no way, absolutely no way, that the state can provide a certain standard of living to which we are accustomed once we become pensioners, okay? Because we are not paying enough into the system, okay? The national insurance contribution rates have been fixed for a number of years, okay? There is no appetite among the political parties or even among individuals to pay more into the system, okay? And even employers would not like to pay more into the system. Something has to give. And what will give is the pension itself, okay? So I think that okay, we need to educate the young people in terms of what's in it for them and incentivize them. But at the same time, we need to make them aware, okay, of the risks they are taking, okay, in not participating in savings pension plans. Okay, then the other point I had was something that Andrew mentioned about the hassle or the problems with which employers, particularly small employers, would face in administering a system. If he's talking about VOPS, then yes, I would agree, because it will be a big challenge for these companies to set up their own occupational pension schemes. Okay, but if we're talking about third pillar schemes, okay, then it is different. Why? Because the employer's role will be minimal. I mean, all the employer has to do is to identify the schemes which are already being provided in the market by various service providers, okay, and enroll anybody who is employed into the scheme with the opt-out, which I mentioned before, of 30 to 60 days opting out of the scheme. So the role of the employer in that case would be simply a little bit of administration in terms of pushing out the form, getting the employee to enroll, okay, and deducting, like the employer deducts national insurance and income tax, okay, he would deduct a certain percentage specified by the employer, which he then sends on to the service provider. And that's the extent of his involvement in the whole thing. So,
but even with VORPS, France, most of the heavy lifting will be done by the provider.
Yes.
The
yes.
employer would be kind of trying to assess what they want included and what they, the kind of rules. So at the beginning, yes, and this is why I also asked Andrew whether he sees the chamber as having a role to facilitate this administration, because then, once it's set up, it's as if you are deducting the national contribution, the social contribution. So we're close to coming up on 12 noon. A few seconds. What if you had to pick the one thing you think most important to get those numbers up? I'm talking having 25,000 enrolled in 3 years' time. Joseph, what would you recommend?
Knowledge, education, financial literacy, and the benefits of it, the system. Definitely.
Okay. Joseph, Joe? You're muted, Joe.
I think the priority should be spreading awareness.
Awareness
about
as well.
the short-term and long-term benefits of such scheme.
Andrew?
Apart from the awareness aspect, I would say, even though they're very attractive, more aggressive incentives.
More aggressive incentives. Okay. Ramon?
As I mentioned, I think education and awareness are the primary aspects that we really have to focus on.
Last but not least, France, final thoughts?
I think it's all they've all said it. I mean, it must be a combination of all the factors: education, financial literacy, plus, as I agree with Andrew, that there should be higher incentives, at least in the initial period, until the schemes start being accepted in general.
And with that, I thank you, gentlemen, for your time and for your very valid contribution and information. I would like to, inform the audience if there is anybody within, acting in an HR capacity, they can immediately register their interest to attend the information training sessions, which will be delivered by AMCS. 16th and 17th May are the first indicated dates. You can do so on bit.ly/VORPS, all capitals, and register your interest there. In the meantime, I remind you that you can find a lot of financial capability resources on our website, www.gemma.gov.mt. Please do visit because there, I'm sure that you will find plenty of tools to help you with your financial planning. Thank you once again, and we look forward to seeing you for our webinar in May, which will be looking at how we can put pensions on young people's radar. So it's a bit of a continuation on this theme. Thank you once again. Goodbye.
Thank you very much.
Thank you.
Thank
Bye.
you. Good day to
Pleasure.
all. Bye-bye.